philsgang.com takes the worry out of investing.
Pay attention to my show, philsgang.com. It's fun, entertaining, and you get the greatest information, especially stock picks.
That's philsgang.com. When you listen to the advice of Phil Grande at philsgang.com, you'll find investing in the stock market makes sense with the right guidance.
People keep saying to me, boy, things are hard, things are tough. Boy, the market's really screwed up. And I don't agree with them. For us here at Phil's Gang, we make it so it's simple. It doesn't matter if the market's bad or good. We consistently do well because we make it simple. And just like for my listeners on the radio or on the internet or my podcast, we make it simple. We try to break it down so you really understand why the market is going up or why there's continued inflation or why the bank rates are going up. So you understand. Especially yields. The most important thing to understand how yields work. Just what we do. We work hard at it.
Trusted advice, easy to understand strategies that will make you a better investor. Get all the details at philsgang.com. That's philsgang.com. These are volatile times in the stock market.
Market's up 200, then it's up 800, it's up 700.
How do you get the facts when investing?
Hi, I'm Phil Grande at philsgang.com. If you're confused about the stock market, get unconfused. Go to my site, philsgang.com, and listen to my radio show every weekday.
The stocks discussed on Phil's Gang are not in any way a recommendation or solicitation to buy, sell, or hold. If considering acting on information presented, we first recommend you seek out a competent, licensed professional for advice. Get ready for the radio show that tells you what Wall Street doesn't want you to know.
Oh, I'm a money magnet. Money's coming to me. Money sets me free. I'm a money magnet. Money's coming to me.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Radio Network. With your host, Phil Grande.
And welcome to Phil's Gang. It is Friday, the 26th of July. What a week this has been. Really nuts. I mean, this is nuts what's going on. And by the way, today the Dow, right, is up, it was up near 700, now it's around 642. Isn't that crazy? Remember we were told, it's different this time. The AI stocks will never come down. NVIDIA will never come down. It's different this time. And NVIDIA's up, remember, 50,000% since January 2009. And I've been telling everybody, don't think like that. If you're myopic like that, you're going to get hurt in the market. Remember, in the stock market, you got to have skepticism because, remember, the stock market is driven by rumor and nuts. Yeah, let's talk about today, what they did. So this week we got Harris. Now she wants to be president. And so they had to repackage her. They have to make sure they get rid of all the bad stuff, like the border, right? So now she's distancing herself from the border. And then they're trying to repackage that, get rid of all her bad stuff, repack. And today they're trying to put the stock market is going up because of her, because of the excitement. Here, let me show you. Let's start out first with repackaging this idiot.
She is not the border czar. To the extent there's anybody who's a border czar, it's the Secretary of Homeland Security.
Number one, Harris was put in charge, as you said earlier, of combating the roots of immigration. She was not and is not the border czar.
Do you think Kamala Harris...
Stop it. These people are just lying. Oh, by the way, we had three great stock that we did this week, really nice stocks, and they're up about 15 to 16%, 17%. I'll share those with you later on. But, so, that's a lie. Now, there's another cut we have. I don't want to waste our time with it, where clearly Biden appointed her in charge of the border. But they're saying, yeah, but she was never border czar. Who cares what the title is? We all agree she wasn't giving the title border czar. It's like a nickname. But she certainly was giving the responsibility of the border to protect us. Now they want to take and repackage that. Now here comes the stock market. Now we're going to take the stock market. Let's force the stock market up without tech stocks. And we'll move the stock market up and we'll massage the PCE. So it looks like the market's going up because of the excitement about her. And that's what we've been hearing today. Oh, look at the market's going up. People are excited about her. No! Here's what happened. So the GDP came in this week. Now, you all know, on a GDP, you want the GDP to come in better than they expect. Because when it comes better than they expect, then stocks go up. The PCE, usually, the same thing happens. If the GDP comes in and it's better than expected, then the PCE usually comes in better than expected. Not all the time, but majority of the time. So this idiot, Bernstein, who's the economic advisor to the president, and he was during vice president, he has no idea what he's doing. He has no degree in economics. He has a degree in bass drums. I'm not lying. Manhattan School of Music. And he has a degree in, he studied the same thing Obama did, how to be a neighborhood organizer. He's the one that's creating all the policy. So first of all, oh, and by the way, did you know, I don't know how they're going to get around this. She broke the tie. What's created all this inflation, what's destroyed our country, was the three programs. Omnibus program, the American Rescue Plan, the, what's the second one? Inflation Reduction Act. Those were dead. They're even. She broke the tie. That's how we ended up with all the inflation. Her. So, going back to the PCE and GDP. So, the PCE, he had to rig the PCE to make sure it came in not better than expected, not below, just right. And it came in, they expected 2.5, it came in exactly 2.5. Think about this for a minute, how nuts that is. How could you possibly, with the tech stocks going down, how could you possibly sit here and make us believe that the GDP came in just perfect, little higher than expected, so stocks would go up. And then the PCE, when that came in, it wasn't higher than expected, it wasn't low, just right. Are you nuts? So Bernstein then comes out and tries to sell us this BS. Hit it.
If we look at the real income implications of a 2.8 beat on GDP growth for the quarter, it's quite positive. With easing prices, growing wages, and rising disposable real income, you see consumer spending continuing to move these GDP reports forward, and that's good news for American households.
Very, 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 oh my God, that's awful. What a lie. That's a lie. Look. He's trying to make an argument that wages are higher than inflation. If that was the case, then why the hell is it that 54 to 64% of Main Street workers, Main Street people every day on the street, they're really suffering. Their savings have dropped from 2.1 trillion to 722 billion. Their 401ks, they've had to withdraw historic 40%, just to meet their expenses, groceries, gasoline, used cars, all that stuff, right? Because remember, gasoline's still up 40% for the day that they took office, these characters. Groceries still up 25%, rent's still up 30%, and so on. So he's making the argument that people have great disposable income. It's a lie. No, they don't. If they have great disposable income, then if they have extra money after paying all their bills, why is it they're withdrawing 40% out of their 401k? Why is it their credit cards tapped out? I mean, their credit cards are tapped out. The debt in credit cards is enormous. Enormous. Never seen credit card debt this high. So what happens? So here's how the government figures. This is the fantasy land of government. So Bernstein, he decides to massage the numbers to prove that there's plenty of disposable income, but he's got a problem. Durable goods numbers came in and they fell through the floor. What's that mean? Well, durable goods are your big ticket items. big screen TVs, appliances, all that stuff, vans. They can't sell any of those stuff because people don't have any money. And to prove that, you just go look and see what this week came out with JP Morgan, Goldman Sachs, and with Wells Fargo. Citi, Goldman, and Bank of America, they reported this week they have combined losses of $4 billion. Those people, the customer, who owe $4 billion, just can't simply repay their loans. That's the first quarter. I mean, this is insane. They can't pay their loans. So he's trying to tell us, though, on the other hand, that people have plenty of disposable income because they're making much more than, and they're covering the inflation. No, they're not. No, they're not. He's lying. Because remember, when you look at disposable income, okay, it's been crushed. It's been crushed. Because the so-called economic recovery, the QE, right, stock buybacks, all that crap, they started that with a surging money supply. Money supply. They just printed and printed and printed money supply. So they could give all that money to the CEOs. CEOs could buy their own shares, push the stocks up. So we had a surging money supply. That caused surging inflation because they printed the money. And surging rates. We went from August 2020, we were at 0.110. We were at 1/10 of 1%. That was that's the short-term Fed rate. If you were in business, you could get a loan for 2%. Because the cost of money was 1/10 of 1%. Imagine that. So by keeping that rate to zero, that's how they tried to increase the economy, build the economy. Well, it didn't work. Because it created tremendous inflation. So they finally moved rates up with all this inflation. They started in 2020. Okay, so 2020, they started moving the rates from 0.10 to where they are today, 5.2. Wow, that's a huge rate increase. That destroyed budgets. That destroyed disposable income. And he's sitting here lying, saying people have a lot of disposable income. No. Now, he's playing games. There's a lot of ways, remember, you can count disposable income. And what he's doing a little trick. He's determining how much you're getting paid, not the expenses, how much you're getting paid only by looking at supply and demand for labor. Are you nuts? You should be looking at, like everybody else does, what's, real time, real increase in cost, real living expenses. That's what you got to look at. You got to look at how much is cost going up. They don't look at that. They look at supply and demand for labor instead of looking at the real world living expenses. This is why 54 to 64% of Main Street workers can't make it. This is why their savings are down from $2 trillion to $722 billion. This is why their 401ks were drawing up to 40%. And this guy's lying and say, oh, we got plenty of disposable income. No, the way they count it, they do. When you just, when you're counting disposable income, if you do it the way the government does it, only by counting it through supply and demand for labor, instead of looking at how much are expenses and how much money do you have after paying all your expenses, what you got left. Now again, the best measurement is go look at durable goods. If people aren't buying durable goods are going down because there's no money to buy it. So this whole thing is the big packaging. Today was the first part of the packaging where they're going to tie the stock market to her tail and say, look how the market's going up because of Harris. This is what they're doing. Listen over the weekend. That's what you're going to hear. By the way, by the end of the show, we've had a real, if you're a subscriber, you would know this. But as a subscriber, if you followed my picks, we had 3 great stocks. They're up about, I don't know, I have to look, but they're up about between 15%, 17% or more. I'll go over those at the end of the show with you. They're fun. We got 3 in a row, bam, 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 and we'd have. I hope you followed me. Okay, it's free for 10 days. If you decide you want to join the gang, that's fine. I've been doing this for 50 years. Our education program, we've been doing it for 25 years. Our charting that we design, okay, that tells you when to buy, when to sell. That's fantastic. Okay, and I'll show you those. You can't go wrong. The color tells you when to buy, when to sell. And if you're in a stock and it's going up, and all of a sudden money's going to start coming up, it'll turn yellow. So you can see that it's warning you. But I'll go over those later. So let's talk about Biden and Harris here. So he's claiming consumers aren't in trouble. You heard him. They got plenty of disposable income, which is a lie. And the total household debt, get this, is $1.8 trillion. Each individual has debt of $147,500. Now get this. Mortgage debt is at a record of $12 trillion. Mortgage rates, the rates have gone up 176% under these two clowns. Home payments, your home payment, when they became president, Harris and Biden, went up 141%. And everybody's sitting there, I can't believe when people sit there, unbelievable. Talk about stupidity, unbelievable. So banks are in deep trouble. And I talked about this in May. I said nobody wants to listen to me about the banks. Everybody's so caught up in the tech stocks. Banks are going to collapse because people can't pay their bills. And sure enough, they just came out with a report showing people can't pay their bills. They can't pay the banks. And he comes out saying they have great disposable income. Well, which is it? If the banks are coming out and saying, for God's sakes, we're owed $4 billion, customers can't pay us. And he's saying they got plenty of disposable income, then why the hell aren't they paying their bills? More when I get back.
Want more information on this show? Go to philsgang.com or give them a call at 877-600-GANG.
At St. Jude Children's Research Hospital, we're fighting against childhood cancer every day. At the heart of this battle are our donors.
Most of us want to make some type of difference in the lives of others. St. Jude does miraculous work.
The fact that no one has to pay, it's a place where everyone is treated as an equal.
Everybody is welcome here, and it doesn't matter your religion or what part of the world you're from, all that.
It's commercial free, so you get just all the facts. Yeah, I can do it twice a week. So just tell them it's and what we need you to do, you should mark down the numbers of people watching. See if it could, just track it and see if they've gone up or not. All right, so let's see. So big. So, again, we're being lied to. They're packaging now the stock market. They're going to tie it to Harris to be able to come out and say, look how the stock market's doing wonderful because they believe in Harris. Are you kidding? She's a moron, all right? I mean, this woman is a Marxist. I mean, it's unbelievable. She wants to get rid of my insurance. And she wants me to go under a government insurance program. Are you kidding? Are you nuts? And talk about that just for a moment. I was watching these hearings. And I was watching we got so much going on. Think about this. We got Russia and China flying bombers, warplanes over Alaska. And I'm watching the FBI director. He's a real piece of work. Sits there, I don't know, he must snort coke all day long because he's always sniffing his nose. And they're talking about a ladder. Do you have was there a 5-foot ladder or a 10-foot ladder? How the runs, how far apart were they? 8 inches, 14 inches? You gotta be kidding me. We got a president, okay, that doesn't know what he's doing. These guys are on the border flying bombers and fighter planes, the Russians and Chinese together, and these morons in Congress are talking about a ladder that went up on their roof, and they're investigating the ladder, how far they're... I went nuts. Are you kidding? These people are nuts talking about a ladder with everything going on in this world. But one thing I've learned about this business after 50 years, the stock market, especially now, it used to be, but now the stock market has no connection to the economy. I hate to break the news, but it doesn't. Totally separated. But the good thing about the market is it's made it easier. When I first started out 50 years ago, you needed to study everything to find out which. I always had to go find a company, okay, that was going down, belly up, but all you really needed was to clean out the management, replace the management, and hold on to it 5-10 years, sell the stock, you made a lot of money. That was a lot of work, okay? And like I said the other day, the interesting thing is what people don't realize about all these guys, Soros and all the big names, how they make their money. They're not that bright, except for Warren Buffett. If you take Soros and all these people, all the big name guys, they have, their skill is to acquire money. Their skill is to have access to money. And they can have 5 stocks. 4 are losers, 1's a winner. They'll come in and they got access to such huge money. They'll pile millions and millions on that winner, driving it up, and they never lose money because they're always taking care of their losses. Where you, I hate to tell you, in your 401k, you're screwed because the money manager in your 401k, and by the way, understand 401k money managers are horrible. They're terrible. They can't find a good job. They have no talent. They just don't have any talent because anybody with talent wouldn't be a 401k manager. You'd be a hedge fund manager or you'd be trading for yourself. A 401k manager is like being a garbage dumpster. I mean, nobody looks at them with any respect. These are people who are losers, okay? So these 401k managers, it's awful. What they do, they get rid of, to cover up their mistakes, they get rid of all their good stocks, the ones that are making a lot that you should be holding on. And they take all the garbage and hold the garbage and sell the good stocks so at the end of the quarter they can show they're making money. Isn't that awful? But going back to the subject, we had a big red flag in May on the banks. We had a big red flag from Citigroup, Goldman Sachs, and Bank of America that the consumer was in deep trouble. Well, we knew that from what was going on with the regional banks, right? Remember in 2023. We also know that the banks are in deep trouble because of all the commercial loans. Nobody's talking about those either, are they? And that's why I tell everybody, this rally we're having today is nuts. All you got to watch today, let's go to my chart. You want to know what the market's going to do? Really, really simple. You should join my gang, for God's sakes, free for 10 days. Okay, and it's fun. Here's the key, NVIDIA. That's the key to everything right here. The whole market is based on NVIDIA for the last, since 2009. So look how NVIDIA is unable to break above the 50-day moving average. Look at that. If it can't get above that 50-day moving average, you're losing all your support. Remember how the market works. When you have a stock, let me show you here. Here's how it works. When you have a stock, you want the stock to always have beautiful support, right? In other words, you want the stock to be, I guess my pin's not working here. Hold on. Let me try it. See if it works. No, not working. Okay, sorry about that. For some reason, my pin's not working. Okay. So if you have you want the moving average, here, see this? You want the moving average always to be underneath your stock. Always be underneath your stock. Like if you go back and look at Enron, when Enron's moving average dropped, and I can find that for you. I hope I can. Wait a minute, my pen's not working. Let's see. You reset it? Go ahead. So you need that support. And Enron, remember what Enron had? It had great support. When Enron was a hot stock, was going up, you always want to make sure you got that where the 50-day moving average and 200-day moving average, okay, is like this. Let's see if I can get this to work now. Sorry about this. Okay, here you go. So here you want the 50-day moving average going up like this here. See it? You always want to be on the upside. Let's use that as the 200-day moving average, okay? And then the 50-day moving average, you want the 50-day moving average to be going up like this. So you want the 50-day, you want the stock on top of your moving averages. You see this 50-day moving average? See how NVIDIA is on its way down? The danger with that is this here. If it starts to turn this way, and then your stocks end up on this side of it, like this, just for a moment, your stocks end up right here on this side of it, and then all of a sudden the 200-day moving average, you have the same problem right here, right? The 200-day moving average now converts, right, crosses over, and what it does is goes on this side, and therefore when you have the 200 and the 50 supporting your stock, now the stock is on the wrong side. The stock is underneath the support, so your stock is under here like this, trying to break out. It can't break out. That's when you make a ton of money shorting. So it's just real simple. If your stocks are on this side, okay, if the stocks are on this side right here, perfect, right? The stocks are on this side. If your stocks are on this side, that's called resistance. They can't break out. That's what happened to Enron, and that's what you got to watch with NVIDIA. If NVIDIA, you can see NVIDIA right now. See how it's underneath. If that turns over, then it's over for the home market. That's the key. Now, the other thing that's going on is this, that you want to make sure you look at the S&P. Okay, we wanted this S&P to pull back desperately. The last thing we didn't want to see the market do this here. We didn't want to see the market break big, okay? The worst thing could happen if the market broke and started to go down like this. That's the worst thing. Why? Because you want the market to test the top. You want it to go right back and test the top. Why? Because when you have the top in the market, here's your high right here, you want to go back up and see if you can break through it. Why? What you want to look at is, see the stocks when this thing was coming down, right? When the market was coming down, see the amount of red, that's the amount of sellers. You want to get a test immediately, and thank God that's why this didn't drop. You want it to go up and test the top. It's always the top. That's the test. So on the way up, let's say this happens. Watch this. You see the green bars? So all of a sudden the green bars are like this. So in other words, you had more people interested in selling than now interested in buying. Now what happens is that's a signal of a short. That means when it starts coming back down like this, it takes out this guy right here, this low right here, it will totally collapse right there. It takes out that low. And especially if you're on the downside, okay, of the moving average, right? All of a sudden you're, instead of support here, you're on the downside, right? So the key is, we're in this part now, in a situation where it pulled back. That's terrific. That's what we want. Stop. Thank God it stopped. Because now we got to measure this here. What are we going to measure against this here? Real simple. We're going to watch and see, by the time this gets up to the top, up to here like this, when that gets up to the top here, okay, do we have more buyers like this? We have more buyers on the way up, I'm exaggerating, than sellers on the way down. then you know which way the market's going to go. So that's something for you to look at, okay? That'll help you. So all we want to know during the test on the way up is this being tested. You watch the Dow, you watch the S&P, watch your stocks. On the way up, all you want to know is, do I have more people buying than selling? Now, all of a sudden you look, and on the way up it looks like this after 3 days, 4 days. And you got more sellers. See the sellers and less buyers? Then you know as this thing continues to go up, when this thing continues to go up, it's over. That thing's going to run up like this. It's going to stop, turn, come down. And when it takes this low out, be short. And that's why, again, shorting is a wonderful thing. You know that 80% of people lose money in the stock market because they only know how to buy. You got to learn how to sell short. All right, going back to what they're doing. Now the stock market, no more, we're going to have a big rate cut come September. I don't believe we are. They've been saying we've been having a rate cut starting in October 2022. How can you have a rate cut when rates went from 0.5% in 2000, I think it was 2022, to where we're now the short-term rate, we're at what, 2020, we were at short-term rate 0.1, 0.1%. Today we're at 529 points. 2020, we're up 10 points. Now we're up 529 points. That's serious. So how in hell are they going to have this big rally and sustain itself when interest rates are at 529 points? It's insane. I don't think it's going to happen. They can't cut rates. Inflation is still with us. And when you look at the numbers, and especially when you look at this, Bernstein's an idiot. When you look at the numbers, what it's costing us for shelter and for food and for, it's insane. We're still paying up 40% for gasoline. Used cars are still 47%. So how can they say inflation is down? Inflation is down on what? Stuff we don't need, like furniture, for God's sakes. It's down on furniture. What do we need furniture for? We got furniture. But you need car, you need auto insurance, you need health care, you need to pay your rent, groceries. That hasn't come down. And so they're going to sit there repackaging this moron, and they're going to try at the same time repackage the stock market, try to get a rally going against all odds, and no more tech stocks. They're going to go for Lazy Boy and Home Depot. What are you, nuts? This is going to be really interesting. So the bottom line is, as I said, in the next few weeks, on the way back up in the S&P, that's all you got to look. Can they get to the top of the S&P and get beyond the top and identify we have more buyers coming in on the way up than we had sellers on the way down? That's what you got to look at. And as far as gold, okay. Gold stocks are going to be terrific. You got to be patient. You got to be patient with gold stocks, okay? Because China's the biggest buyer of gold. And they start buying gold, then they stop buying gold. So it's going up and down, up and down. But overall, your gold stocks have been fantastic. Our miners have been great. Our gold miners. Look at this. We've made a lot of money in our gold miners. Look at that. And the beautiful thing about what we do is every chart will tell you when to buy and when to sell with a color code. Try it for free for 10 days, and you're going to have fun. Look, do me a favor. Hit subscribe and like. Really appreciate it. See you on the chart. Join the gang.
You have been listening to Phil's Gang with your host, Phil Grande, on the Off the Wall Street Radio Network. Off the Wall Street Radio Network. Remember to visit Phil's website at philsgang.com. That's philsgang.com. Or call the office, 877-600-4264. That's 877-600-4264.
It's up to me.